Hey everyone, and thanks for jumping back into the cryptoverse. This is DCA Live. We do this every single week. We have um, the usual suspects, Rob up in the upper left, and we also have James from Invest Answers as well. And I would encourage you to pause the video if you're watching it and make sure you go subscribe to them. You can find the link to their channels down in the description below. So we have a lot to talk about today. Some of the main things we want to talk about are obviously the Fed raising interest rates. I mean, we have a pretty big month here coming up with kind of like to figure out what is the Fed's resolve going to be, and what's kind of their outlook going to be going into the end of the year. We'll also talk a little bit about the European Central Bank finally getting interest rates above zero. Huge congratulations to them, and maybe the general outlook that might have on the U.S. dollar. And we also will talk a little bit about the merge and general expectations for Ethereum, and we'll also talk about Bitcoin's outlook going into the end of the year. So we have quite a lot to talk about. Thank you guys for tuning in. And then at the end of the video, we will make sure to answer as many questions as we can. So Rob, James, pleasure to have you here.
Thanks for having me.
Good to be here.
So the first question I want to ask you, and let me pull up the quote from it. James, I'm going to start with you on this one, okay? So on Thursday, Powell gave a talk, and like usual, when Powell speaks, the market is like a knee-jerk reaction, right? Like every word they're living on the edge of their seat for. So he said, "We will keep at it until the job is done." And he said, "History cautions strongly against prematurely loosening policy." So my question, or sort of maybe some nuances, he's trying to tell us that he's trying to tell market participants, I think, that interest rates are not coming down anytime soon. That's what I gathered from it. Do you think that market participants are starting to believe him, or are they still calling maybe a theoretical bluff, and they don't think he'll have the resolve to continue to raise rates too much longer? James, what do you think?
Yeah, well, if you look at the stock market today, the stock market isn't worried. Those people who are allocating are not worried. But it's a great question. There's a lot to unpack because a couple of nuanced things that you mentioned. And you mentioned rates come down, not continue hiking. Did you say that on purpose, or?
No, I mean, maybe I misspoke, but what I mean to say is market participants are obviously, I mean, right now the Fed is obviously hiking rates. But do you think that market participants are thinking that they're going to start cutting rates sooner rather than later, or do you think they'll continue on up? I mean, it's probably possible I misspoke when I said it.
Well, Jay Powell, I think, did a heavy jawbone, as I mentioned, I think before at Jackson Hole. But you have to look at the data that he hopefully is looking at. And that is, if you look at the leading inflation indicators, gold, copper, they're both in the toilet. Oil painted to death cross, 40% off the highs. Lumber's down 60%. Companies are swimming in inventories and need to drop prices to offload all their stock. The jewelry container index tanked, down 50%. Housing market ground to a halt. So I hope he is looking at all of these. And one of the issues is, I think he's trying to rebrand himself, rebuild his reputation. And the way he does that is because he missed the ball so many times over the last 13, 14 months. Now he's trying to redeem himself. And the only way he can redeem himself is take a page out of the Volcker book. But he's trying to conflate the 70s with today. And you can't, because debt to GDP in the 70s was 30%. Now it's 130%. So that's off the table. And also, I think it was Kathy Wood that said, Volcker doubled the interest rates. They went from 10% to 20%, and he smashed the market. But JP has 10x them from 25 basis points to 2.5%. And that's a big leap for a debt-based system that we live in today, which wasn't back there in the 70s and early 80s. Other thing is regarding the CPI, which is kind of key to everything, and the PCE, it clearly peaked in March, somewhere between March and June, I think more March, April, per the data that I look at. But CPI is BS, as I've said many times. I do see it coming down. It will print negative next week, indicating maybe deflation per the data above I just spoke about. And the market's already front running it. But there is a chance, though, that the number is bad, a nasty surprise. But there's also a chance it will be good based on all the data that we see. So it should go deflationary. And that might be enough information for JP to do a 50 basis points and not the 75, because my thesis, he can only go 100 basis points more. And after that, he really smacks it to the economy.
Yeah.
So that's my take.
Well, I know you said before you think they can't really go above 350, right?
Yep.
And I just looked actually a couple moments ago.
Fed funds rate of 3.5%.
Right.
Yeah,
I just looked a few minutes ago, and markets, it looks like, are pricing in a 90% probability that it's going to be a 75 basis point rate hike. Do you think? Do you think the market is going to quickly change its tune?
Oh yeah, it changes from hour to hour, minute to minute, based on data. Again, there's no point in looking at that till we get the CPI print.
Sure.
Next week.
Yeah,
that's my point.
I saw like consensus on that is like 8.1%, I believe, for inflation year over year, which is, obviously, if that's right, it's moving in the right direction. But Rob, what do you think? Do you think the Fed is going to do what they say they're going to do, and they're going to remain relatively hawkish and keep raising them, keep them high, or will they be forced to pivot?
They seem pretty adamant about it, and then we've heard Jay Powell talk about it. The thing that concerns me is that what is the data points that Jay Powell and the rest of the Federal Reserve is actually taking a look at? I don't think they're really they're really forward-looking, like James has talked about gold and copper and the leading indicators. I think that's what they're looking at. They may have looked at a little bit, but they're probably looking at some data in hindsight. And the problem with that, of course, is that they will overcorrect. And I think that's what's going to happen. I think they're going to overcorrect. I think they are looking at, I know, James, what you're talking about, 130% to GDP and to debt ratio. But I think when they look at it, they say, we don't want to have this in the public consciousness as far as inflation rates. Because when it gets in that public consciousness, and this is what he talked about in his press conference, he said it really gets even more difficult to bring it down. So he might do what he said he's going to do. And I think it's going to be detrimental to GDP and growth. And one of the things that was interesting to me, what he said about was, he said, look, he goes, we're not, I thought it was kind of odd though, we are not political. We don't sway two-way with any way. However, how is he actually appointed? Well, president, and he's appointed by Congress. So you don't think it's political, it's a little bit crazy. But having said all that, I think that, the CPI numbers come out and they're negative, good. If the unemployment comes out and it's actually up, that's actually good. And then from there, we'll see where they go and if they actually do the 50 to 75. But it is amazing to me that the market's like, we don't care. And we're just going to keep going as if they have a crystal ball. I know exactly where it's going to be. And there was this data point from a sentiment trader. I saw a chart. They take a look at institutional traders bought 8.1 billion worth of put options and $1 billion in calls.
I saw that chart.
And I'm like, if that's the case, then I think I don't think anybody is 100%. Are they ever? But I guess we'll see what the CPI numbers come out.
Yeah, well, you should have heard Scott Minerd as well on TV.
Oh, that
He's
guy.
saying, mid-October, S&P 500 is going to drop 20%. And it better, because I've got a huge short position, so I'm really talking my bag here. It's like, that guy is just, this is what people need to see through. And the other thing as well that people forget is whatever the Fed does, it's all priced in, ladies and gentlemen. Its question is how far they go and when that pivot begins. And that pivot could also be construed as a slowdown from 75 to 50 to 25. That could also be kind of a quasi pivot. So interesting times. It's a fascinating case study to watch, global macroeconomic case study. And I personally am very excited by it all.
I think I would lean towards saying the pivot occurs when they start, at least when they stop raising. Because they always wanted to front run they always wanted to front load them anyways. But I don't know. We'll see. If they do 75 here in this month, then it's not even that far away from 350. It's getting really close to some of these critical levels that people have talked about for so long. And it's like, if they go beyond that, then no one knows what's going to happen. If they do what they say they're going to do and they go beyond that, then I don't see how we get out of a lower low, right? James, so let me ask you, do you think we get out of a lower low if they go beyond 3.5?
And you mean we go lower than we did on the S&P
Yeah.
500?
Do you think, and I know you don't think we'll go, I know you're saying you don't think they'll go the Fed funds rate past 3.5, but I'm saying, like, let's suppose we live in a world where they do that. Do you think that they can do that and us avoid a lower low?
So what'll actually happen is the key factor to look at is if they do keep on increasing, they're going to reduce the overall PE of the S&P 500, which will bring that down, because that will also be reflected in slowing GDP growth and profitability of companies and everything else. So it's all interrelated. The question is, when I look at some of the, Wall Street guys and the big macro guys, some of them have like 5 or 6 75 basis point hikes hiked into 2023, and they do not see a pivot until 2024, which I think is completely ridiculous. And some of these people actually work at the Fed, which is even more ridiculous. And some have PhDs in economics. So either I'm completely wrong or delirious, or these people are right, or something, or they're just going to smash this economy. So in terms of will the S&P fall, the problem, I think, goes back to the bond market. And when you think about the bond market, typically during a QE period, bond market does bad, stocks do well, people go risk on. And during QT, the opposite is the truth. But driving that demand also could actually indirectly help the stock market too. So I don't see us, people are talking about maybe 3,400 on the S&P. I don't see us going below 3,600, 3,400. Okay. And we'll talk more about what I see for Q4 as well.
Yeah, sure. I mean, 3,400 seems like a reasonable area. I mean, it was the pre-COVID high, I believe. Yeah, we'll see what happens. It kind of sort of going into the next question. I mean, this sort of relates to the U.S. dollar currency index, and we know typically, historically, if it's going down, it's good for risk assets. And I mean, it went down over the last day or so. We see Bitcoin is up 10% on the day, which Bitcoin being up 10% in a day is something you might raise your eyebrow at. I mean, it doesn't happen that often, right? So it's always interesting when it happens. If I go back to to 2000, 2008, though, I can certainly still find times where the dollar was going down at the same time that the S&P was going down. My question, though, is we finally have the European Central Bank, raising interest rates, right? They're above zero, but they raised them 75 basis points. And the euro it's just been awful. Its valuation against the US dollar has been awful this year, even going below parity for the first time in quite a long time. Do you think that the ECB finally raising rates will give the euro any type of strength, thereby potentially leading to some type of devaluation of the dollar, whether the dollar is being devalued from the euro or whether it's the won or whatever it might be? Do you see that as the most likely short-term path, or do you think? And Rob, I'm going to go to you first on this one. Or do you think that Europe is already knee deep into a recession, that it's not, risk assets in general just aren't going to be doing that well, and the valuation of its currency would continue to go down and leading to the further rise of DXY?
No, I don't see. I don't see how the pound or the European currency could actually increase with what's going on over there. I mean, if you take a look at the economy, yes, they did raise their rates. I think they went to it's like 1.75, and they just recently increased it. I think it was, and I was always surprised by this, but how low it was. But I just thought, well, UK. And then if I take a look at everything that's going on, I mean, if you take a look at the inflation rate over there, and I always like to take a look at trueflation. And I actually ask a lot of people on my show about what's going on with the power rates, oil, electricity. And I hear these stories about people going 7, 8, 10x of what they paid a year before. And then if you take a look at trueflation, interest rates almost at 15% currently right now. And that was at a low around 7% just 7 months ago or so. So when I take a look at this and I go, well, how are they going to get out of it? Because if you take a look at inflation, what can they actually buy? I mean, how can they get out of their situation when they have to pay a 10x for their electricity, for not just for oil, but for everything else? So I don't see that being a powerhouse, and I see a lot of pain for the European nations moving forward.
Okay, fair enough. James, do you agree with that sentiment, or you take a counter view?
Well, first of all, over the last, say, year and a half, I mean, the euro has lost 20%. So those that traded the euro short are doing very well. And it seems to hover around that parity. Every time it dips below parity, it bounces above. But jacking that 75 basis points really helped the euro strength. And it makes up, I think, 58% of the Dixie basket. So it's big. GV pound also may get some help from the new prime minister over there. So we'll see. But the Eurozone economy is going to be really hurt by that. So you have countries like Italy who are already on the brink, and this rate hike will really, really hurt their lending rates. German industry is also hurt by this a lot. So I do believe they're kind of doing it to try and, after the fact, control inflation and trying to copy the playbook, but it's too little too late. I mean, putting 75 basis points in contrast to what the real true inflation in PC is over there is ridiculous. So I think their economy, as Rob said correctly, is really struggling. They have many, many issues. This is literally a spit in the bucket. And the tools that the central banks have truly very little effect in this day and age. There's bigger factors in play that drive exactly what should happen. But that being said, the special level of that 1.10 for the Dixie, it seems to be topping out there all the time, which is good. But at the same time, I think we know where the Dixie is. I don't think people are reading into it too much anymore in terms of Bitcoin strength. In the past, they worked opposite to each other. They're still kind of doing that. I tweeted last night about that. But that day will kind of come because you're comparing a poop to worse poop, as I always say as well, out there.
Fair enough. That's one way to put it. I think that one of the things that I've remained somewhat cautious about this year, and actually kind of finishing off on that thought, one of the things I said early this year, and I think, Rob was saying too, is like cash is king, right? And I've had a lot of people reach out to me and say, yeah, like I agreed that cash was king, but I was holding all my cash in euros, and I wasn't even something I was even thinking about, right? I'm just an ignorant American, just thinking about the U.S. dollar, and not so much thinking about all the other currencies that other people might be holding. But it is interesting because I'm not really sure, the sort of the medium term outlook for the euro. I mean, maybe it bounces a little bit around parity, but I don't know. Going into the next question, I want to sort of pivot, unlike the Fed, to crypto. And what I want to talk about is, in general, at the beginning of this year and sort of getting into the middle part of the year, there were a lot of things that went down, right? A lot of companies that were insolvent. And I think a lot of people lost trust in the cryptocurrency market. And this was one of the things we mentioned back then is going to keep the bear market around for a while, is because people just aren't going to trust a lot of these things for quite a while. And one of the things that ultimately that leads to, I think, is regulation. And they've been fairly adamant that there will be coming regulation. Some of it, they said, I think will be coming out by the end of this year. But I'm guessing we'll continue to see that. And I think even already we've seen some things come out over the last few weeks. But what are your general thoughts about regulation in the cryptocurrency space? James, we'll start with you on this one first. My question basically is, as we head into, say, the next, let's say, 3 to 6 months, how concerned are you with coming regulations? Or do you think it's just like a nothing burger and it won't ultimately be a huge deal?
Putting together this rule of my investing rules, it's like 60 to 80 at this stage. And one of them is don't worry about things you can't control. So things like extraneous circumstances shouldn't keep you out of the market, especially when you don't know when they're going to hit and how bad they're going to be. So on that note, there was a congressman, I don't remember his name, I don't know if he's Democratic or Republican, but he said words to the effect of, we didn't ban it in the beginning because we didn't realize it was important. And we won't ban it now because there's too much money and power behind it. So a congressman in the US said that recently. Now, look how much crypto billionaires are pumping into lobbying and time spent in DC, and money for lobbying, money for campaigns, contributions. And people wouldn't do that unless they knew there was a reason for it. And then you got a bunch of other people who are just coming over, more billionaires, like Dave Rubenstein recently said. The greatest fortunes are made when people go against conventional wisdom and take on some risk. So I think the in summary, the regulation takes time. Killing innovation is not one of the things that US regulators will do. At least I hope not. I hope they're smart enough to not be that dumb. And I'm pretty confident that even if certain cryptos are classified as securities, like Cardano, and I know Ethereum and Bitcoin have a pass, but Avalanche, Solana, if they are classified as securities, so what? What'll it be? Like a fine, $50 million, $100 million, a little bit of reclassification. Again, a nothing burger, as you correctly say.
Well, I mean, I think, yeah, I mean, at the end of the day, right, it's like a kind of slap on the wrist. But I think the one of the concerns could be something like with what happened with XRP, I mean, like, it was a coin that once upon a time did really well in 2017. It almost seemed like it was, I mean, I don't talk about XRP that much, but I mean, in terms of the lawsuit with the SEC, it seemed like it might be gearing up to do something in 2021. And then,
well, I don't want to talk about XRP at all, but there's more to it than just SEC going after crypto.
Right, but I guess the sort of the question then is, and I'm not making any specific claims about XRP. I'm just in general saying like the SEC is coming. There's a lawsuit involved over there, and you could argue that helped, or it tempered some of the gains that XRP could have seen had that not occurred. So I mean, Rob, do you think something like that could be something worth thinking about, or is it just kind of like, not really that important?
Just regulation in general?
Yeah, like do you think a lot of regulation is coming in the next 3 to 6 months, or is it just going to be like no one, now that crypto's not really in the spotlight anymore and it's in a bear market, maybe they just brushed it under the rug for a while? What do you think?
Nah, I mean, like James has a good point about what the senator or congressman said. There's just too much money sloshing around. And I always said this before. I said, government wants us. I think government wants it to stick around. The reason why is because they can tax it. I mean, they don't want you to have your money just sitting in a bank account, inflating away. They want you to invest it in something, and hopefully you'd sell it at some point and then give it back to the government in capital gains tax. That's what I personally believe. And I've always said this before. I don't, it's not popular, but I always said we need regulation to come here in some way, shape, or form, at the very minimum, just to say exactly, what is a currency, what is a commodity, what is a security. And then there was a story we covered just yesterday. Gary Gensler was speaking at a conference, and he said how he was looking forward to working with the CFTC over security and non-security tokens. And it came into another story which talked about the Senate Agricultural Committee, which oversees the CFTC, and they are pitching their views, which is Bitcoin and Ethereum are commodities, and everything else might be a security. So I just think, like, if it goes down that route, I mean, and things are securities, we deal in securities every day, don't we? I mean, that's what stocks are for, and equities and things like that. So when I take a look at it, the only thing I see as a problem is, and actually I think it's a good thing, is that these cryptos that are like ranked 100 and below, can you imagine them trying to go to the SEC and register their project as a security, and all the paperwork that has to go through that, and all the money and the legal ramifications and everything they have to do? It would be a backslog. Yeah, it would drip down to a bottleneck. And then what will happen is, I think, is that these bigger crypto projects will just say, hey, let's pick up X, Y, and Z, and then add them into us because we need developers and we need what they do. And before you know it, you have a consolidation. That's kind of how I see things going. I could be wrong.
All right, fair enough. I mean, I just want to get people's insight on this because it is something that obviously is coming up relatively soon, theoretically speaking. And but you make a good point. I mean, like, stocks are securities. So why don't we just go ahead and figure out what everything is, and then we can just go on with our lives.
Yeah, and then one more thing. There was that report President Biden put out. He wanted to have the crypto organization looked at. Well, they came out and they made the recommendations for energy usage, and that just dropped, I think, last night or this morning. And it looks, I mean, there's some negative parts in there, but there's some pretty positive highlights for the crypto market itself. And I think that's part of the reason why people are so happy.
Right. One of the things we've talked about for the last few months, obviously, is the Ethereum merge. And I guess there's a really good chance that by the time we have another episode of DCA, the merge will have taken place, right? If it takes place next week. I don't think they have the specific date, but like, the 13th, the 14th, the 15th, somewhere in that ballpark, I think is when it's going to occur. What do you guys think? I mean, Ethereum has rallied more than 2x off of its lows. Ethereum Bitcoin valuation is still over 0.08. Do you think is it a sell the news event? I mean, I think all three of us are pretty bullish on Ethereum long term. I know maybe James, I think you're in the camp that you think that some of these other layer ones will provide a bit more competition to Ethereum. But regardless, I mean, I think over the long term, Ethereum is going to be a solid play, but there's a lot of short term uncertainty in what's going to happen, following the merge, and what happens if Bitcoin does get another leg down at the end of the year. What do you guys think after the merge? Rob, any gut feelings as to what Ethereum's going to be doing over the next few weeks?
Yeah, it's a good question. I always say, buy the rumor, sell the news. But there was this article from Chainalysis, and this might speak to James because he follows more of the institutional investors than I do. But it talks about how Ethereum institutional investors with balance over $1 million, they went from less than 200 in January 21 to 1,100 by August. So when I think that one of the big things is that, of course, the yield looks like they can expect to get 10 to 15%. That's what the report said. I don't know. I didn't realize it was that high. But if it is that high, then that's a lot for them to say, well, I could do that, or I could do T-bills and
right,
lose my shirt. So I mean, maybe it is a long-term play, but we'll see. I mean, I still believe in Ethereum. But
James, what do you think? Is it will Ethereum continue to show strength, you think, for the rest of the year, or is some of that strength going to die out a little bit after the merge?
Well, we've seen the swift move between assets. For example, the last 16 hours, the 10% gain in Bitcoin in a short window of time, and then Ethereum kind of stagnant, but then it bounced a few hours later, up about 5%. I think it will be a little bit of a buy the rumor, sell the news. I'm very interested to see what the hard forks do, if there are any. My plan is if they have more than, say, 5% of the original chain value, flip them immediately. Not financial advice. Also, I still believe the proof of stake, a lot of people still believe the proof of stake will be a silver bullet to solve all of the issues plaguing Ethereum, like slowness, TPS, etc. But it's not going to. So there might be a bit of disappointment, which could bring about some selling pressure. And there are still people that believe it will fix everything, and it's just not at all doing anything to the fundamental chain. The two positives, though, still remain that ESG investors may consider it, even though ESG is part BS, also like the CPI, in my opinion. And the other interesting thing is we were promised a deflationary token after EIP 1559, but that didn't really happen. They're saying it's going to happen now, but I'm interested to see what will happen, because if it does become deflationary, that'll have a big impact on buying pressure too. And number go up should happen. And then finally, I don't know, we'll see. I think when I did a video on Wednesday around relative chain valuations based on activity and daily active usage, and I think when people see relative valuations in a comparable way, there'll be a rude awakening. So looking at developers and traffic and breadth of dApps, etc., because Ethereum is still expensive and I still own it. And it's very reliant on the layer 2. So it's a very interesting case.
I agree definitely with a lot of what you both said. I'm very bullish on Ethereum for the next cycle. I think even this rally has even made me even more convinced that it'll do well next cycle. But I'm not sure about the short term. And we'll get into that question with regards to Bitcoin here in a minute. But the other thing, to sort of go off what James was saying with regards to the potential forks, look, no one knows exactly what these forks are going to do. But if you look at prior forks of, say, Bitcoin, you have like Bitcoin Cash, you have BSV, they're bleeders, right? Like they ended up becoming bleeders. It didn't mean they don't occasionally pump, right? And sometimes they will initially pump. But for the most part, a lot of them just become bleeders because it's not where the development's going to be. Like, that's not where people are going to be focused in the future from a fundamental perspective. So yeah, again, like, not financial advice, but history tells us anything, is that all these random forks don't generally do that well over sort of like a yearly, multiple years. So I think that was a good thing to point out for everyone. The last thing, before we get into questions from the audience that I'd like to ask is, what are your opinions on Bitcoin going into the end of the year? I mean, we're in September now. A lot of people are thinking that, it's just gonna, like it could go down and we could have another shakeout. I do think that is a possibility. Like I'm not gonna say it can't happen. We've seen it happen multiple times this year, where it went down to 33K and then it went down to, 25K and then 17 and a half. So, but what do you think for the next few months? Like, do you think it's going to show any strength at all? Or will it just be, will it be choppy with a certain type of bias one way or the other? What do you guys think as we head into the end of the year? James, what do you think?
Well, we started at 19.6, didn't we? September 1st.
Bitcoin, like that, so I believe,
technically it's a green monthly candle that nobody was expecting. Everybody expects blood on the streets in September. And I said, because we had so much blood on the streets in the previous months, it's unlikely for it to happen again. And that's why it's, time series are very, very important. We also had the worst start in the stock market in 50 years. We know risk assets are correlated. That's Bitcoin and stocks. We know there's a horrible macro environment. We know the Fed is jawboning and all their hikes are priced in. We've gone through the crypto layman moment. But real simple, I think, if the Fed pivots, and if that is also a slowdown in increasing of rates, the market will interpret that as a pivot, change in direction. And we saw last night, Bitcoin can move 10% in a night, which is big. Ben, I was trying to figure out, when was the last time you saw more than a 10% candle on Bitcoin? It's like April 2021?
Yeah, I don't know. I mean, I actually have a chart where I can look at daily moves, but yeah, I'm not sure off the top of my head when the last one.
April when it hit a pi cycle top, I think.
Yeah. Anyway, there was a lot of signs yesterday that it was going to move, especially with what we're having with proxies. But I'm personally very excited about all the other action and the market. Q4 is historically very, very good for the stock market. Dominoes are falling, adoption's happening. The security is there. The Lightning Network is growing. Metcalfe's law is growing. The new wallets are increasing all the time. So all the fundamental metrics are there. As I said a million times, I believe we bottomed back in June, 16th or whatever it was. And it wouldn't surprise me as well if the buyer last night, because somebody stepped in and bought a truckload, if that was a new treasury, or BlackRock or somebody, just a tinfoil hat moment. Somebody went in and bought a lot in a very short window of time. But Q4, I believe, will be very good. I believe Fed hikes are priced in. There's $3 trillion in the sidelines and needs to find a home. And the bond market is toast. So overall positive from my side.
I like your optimism. I wish I shared it. We'll see over the next few months if it can hold up.
Well, to be honest, we will be here January 1st. Let's do a postmortem.
We'll see. I mean, the 17.5 is what, 75% down from the all-time high.
Yep.
Yeah, I think a lot of people are wondering, is it enough? Or is it not? I mean, I think at the end of the day, like we're low enough where it shouldn't matter too much, right? Even if it does go lower, it probably shouldn't change too many people's macro or your strategy. Yeah, but it is
it's funny because people weren't buying. We dipped below 19K 2 days ago, and that was 7% or 6.5% from the 17.5 bottom, and people are still hesitating to buy. I mean, it's like what I call another bite at the apple, and people are still saying, no, I'm waiting for 12,000. No, I'm waiting for 3,500.
Yeah, I don't understand that part. Why don't you just buy on the way down? Just dynamic DCA. It makes for me, I'm just like, that makes sense.
Yep.
Rob, what do you think? What's your, I know when we kind of went into early 2022, it wasn't, we didn't really have the best outlook. Do you think it's just going to be a continuation or?
Well, if you take a look at, there was 3 positive things I took a look at. One was, of course, the BlackRock story and them getting into it. Then just yesterday, or maybe 2 days ago, Fidelity said they were definitely going to start to offer that trading service to their clients. That's 4.3 trillion assets under management. And then, of course, that report just came out, which would really be happy for the ESG people, because it really just says that Bitcoin doesn't, or proof of work mining doesn't put up so much greenhouse gases and effect that it used to be, or that they thought it would. And electricity use wasn't near as damaging, and they can use more of renewables and then not solar flares, the gas flares. So even it all out. So on that part, I mean, if you take a look at, this is what some of the institutionals say, we got to, contrive to the ESG, even though they don't really care about it. That's their green light. But does that mean that we go to 30,000? No, it just means that there's just one more opening. That's all I'll say.
All right. Well, why don't we? I mean, I'll give you a minute. James, I think you wanted to say something, but before you do, I just want people to ask questions in the chat. If you guys have any questions for any of us up here, go ahead and ask these questions. James, do you want to chime in?
Yeah, just one thing to reiterate. When you benchmark the size of the crypto market or Bitcoin to other assets out there, it's a tiny asset, and Bitcoin is super scarce. It's only a matter of time before it blows, but we just don't know when. Maybe it's 2024. Maybe it's early 2023. Maybe there's a run up to Christmas this year. I don't know. But it's, as I say, I'm very excited to sit here and watch it, and I'm a patient person.
Yeah. Fair enough. Got some questions coming in. Digital Cable says, Rob, are you pausing your DCA until we get the CPI?
So this is what's great about us. Like, we're all on this spectrum, right? I know Ben's like, no alts. James is like, alts, baby. And I'm kind of in the middle going, I don't know which way it's going to go. So I have decreased I've taught this on the show, I've decreased my DCA to between 50 and 25% of what I usually do. And I'm looking at the risk metrics. I'm looking at the MVRV score. I'm looking at the hash rate, all those things. And as it starts to go down, then I increase my DCA. I'm trying to be a little more careful and less reckless than I used to be. So I still get a little bit of alts, but not as much as I used to. I still buy Bitcoin and also Ethereum, but I'm not on that side where I'm going, sell my kidneys, put it all into blah, blah, blah.
Fair enough. Yeah, I mean, I've been a fairly bearish person on the altcoin market this year. It's still actually, I mean, right now it's actually still holding up relatively well. We'll see. We'll do a post-mortem, I guess, at the end of the year and see kind of where it ends up. But let's see some other questions. Okay, so someone says, why is almost no one comparing the current macro environment to the 40s? After the war? To me, it's much more similar than the 70s. I think we've done, we've made some comparisons between the 40s and the 70s, but did you guys have any thoughts?
You're dead right. Many macro people have. There are very few parallels with the 70s, but the 40s is much more similar, especially when it comes to GDP, debt ratios and stuff like that. Yes, totally agree.
Well, and all the money printing. I mean, if you're in a war, you're going to print money like crazy. If you're in a pandemic, you're printing money like crazy.
And you got to go into debt for war.
Yeah, and even though there was a lot of money printing back there for the war, it pales in comparison to the money printing since 2009. That is next level money printing for 13 years.
Yeah, there's a lot, and we got to destroy it in some way. So we'll see how that actually works out.
Inflation, that fixes it.
Yeah, that fixes everything.
Tony's asking a question. Are you guys familiar with Peter's, I don't know, Zihan and his deglobalization philosophy, and the worldwide wealth population will drop over this decade? I have seen some people talk about that idea in general, that like if you see population decline, I mean, to some degree, you could assume that markets require more people for them to ultimately trend up. Maybe that's not entirely true if things are automated and whatnot a little bit better. But what are your thoughts about that over the coming decades? Is that a concern that we should have? Like, is a decreasing population going to potentially lead to a reduction in the worldwide wealth?
Absolutely, and that's a huge problem, especially in the fastest growing economies of the world like China. And they realize that's an issue, and I know probably they're working behind the scenes to work with other countries. I know they do a lot of activity in Africa. They're probably finding ways to import people to help them, young people to help them grow their economy. But he's dead right. It's all about that. That's also a huge concern of Elon Musk's too.
Yeah.
It's one of the things between that and AI, they are the two things that keep him awake at night. Maybe that's why he has 10 kids, trying to repopulate the earth himself. But yeah, the other thing that concerns me too is, the sheer debt load and all the talk about the Great Reset and the WEF. When you start looking behind the scenes and meshing up kind of the connective tissue behind things that are actually happening, it's very frightening. So the next 10 years will also be interesting. So be prepared, everybody. Prepare for the worst and plan for the best, as they say. Isn't that what they say? Something like that?
Hope for the best, plan for the worst.
Yeah, that's what I mean.
Let me see. There's some other good questions in here. Someone said, what could be tokenized next in order to release more of the potential of crypto? I mean, I guess if you think about NFTs, that was something that was huge in this last bull run, right? NFTs were crazy. They've calmed down a little bit. What do you guys think about any specific future narratives as to what might be tokenized that's going to really lead to another bull run?
I don't know about a bull run, but functionality. I was never a big believer in NFTs because I just look at them and go, I don't get the use case here, because it's just a goofy picture. And that's just what how I kind of came into it. But there was this graph and this piece of information that just took a look at where NFTs could go. And of course, digital IDs and tickets and achievement of skills. But then I looked at voting, emails, medical records, documents, legal documents, and real estate. I mean, if we could pull it off, the problem is that on the layer one, who's going to be able to do that? Well, if you use it on Ethereum, it's going to be pretty pricey, unless you use a layer. What do they call it? I don't think it's a layer 2. It's a side chain for Polygon. So you could do something like that. I can see how that would be the next evolution. The problem is just getting there. I think we're a long way off, but I can see where things are going. And even this was a thought that Sam Bankman-Fried had about emails. Every day I go through 40 emails and they're all spam. I have to delete them and just junk. He says, what if we could do it where you can send out emails via NFT, via layer 1 solution, and it would cost a penny or a fraction of a penny? How much would that cut cost or cut down the amount of spam that you actually get if you do it on a Web3 solution? I was like, it's not a bad idea, actually. So
did Sam say that? Because Michael Saylor said the same thing for Twitter.
Then he stole it from him. Yeah, no, I took a look right at SBF. His thought process was a penny per email. And I said, because of my businesses, I have these autoresponders for emails. And if I send out 40,000 emails, that's going to cost me more than the yearly transaction. So it'd have to be a fraction of a penny. But I could see how just that part, I could get it. It's just getting there and then putting it together.
There's a lot of good questions in here. Another one.
Can I guys tap into my answer to that one?
Go ahead.
Because Rob hit on it. I think the tokenization of real estate is huge. The global real estate market, I think, measured in 2020 was about 330 trillion. Crazy numbers. It's probably way north of 400 trillion right now. If you could tokenize real estate in an effective way, and I believe the future is gig economies, like gig jobs and also gig places to live. People don't want to lock themselves down anymore. They want to be able to have their villa in Como for 3 months of the year, and then their place in Brazil, and maybe live in New York for a little bit of gig work for part of the year too. I think that would be huge, tokenization of real estate.
You'll own nothing and be happy.
Yeah, I've thought about that one before too, the tokenizing real estate. Someone says, what do you guys think CPI is going to be? I was thinking too, inflation, I know the consensus is 8.1, I think. But if you actually look at core CPI, I thought the consensus was actually 6%, which is actually 0.1% higher than it was last month. And arguably the Fed does care about core CPI. So, do you think, first of all, the overall more broader one is going to come in at let's say less than 8%? And then do you think core CPI is going to come in less than 5.9%, which is where it was last month? You guys have any thoughts?
Yeah, I think it'll be a good surprise, either by 0.1% or something, like 8 or even 7.9 on the core, and the other one just down, either the same as last month or a little bit less.
Okay.
Hey, did you see? Hey, James, you were the one that showed off Trueflation, the website, right?
Yeah.
So yeah, if everybody goes there and takes a look at Trueflation, just looks at the different sectors, it's amazing to me how they break them down. And of course, this is, they use real world data and they use Chainlink to pull in these different sources. But if you take a look at transport, which is vehicle purchases, gasoline, fuels, and things like that, they peaked in February, 22 something percent. Now it's all the way down to almost 11, and everything's pretty much down. Well, food's up, housing's down, transport's down, utilities up a little bit, health, alcohol, tobacco, clothing, so on and so forth. So maybe it will be a little bit better than what people think it'll be.
All right, fair enough. Maybe we have time for one more question. Some people are talking about some of the altcoins that we probably shouldn't mention. Apparently, are doing well today. I mean, if anything, it just gives me more confidence that it's not yet time to take large position or take like long-term positions on some of these altcoins. But let me see if there's any other questions. Someone says the Fed.
It's funny. I've got a list of the top 100 coins that I watch on my watch list, and Cosmos is number 2, up 14%, and Bitcoin's number 4, up 9.5%. So it's beating out a lot of other stuff. So that's really impressive. It's rare you see that from 100 coins. Bitcoin number 4 for the performer of the day. So we'll see. It's pretty good.
That was a good project. Layer 0, pretty good. I think wasn't Luna built on Cosmos? Can't remember.
Let me see.
But I mean, still, it's a great project. I still own a decent amount of it. I think it's going to do well. But I mean, that's just it. In 2, 3, 5 years, when we're all here again, if people look back on this show, they're like, those guys were idiots. They should have backed up the truck, or maybe it'll be something different. I don't know. But I think if you're here for the long haul, it'll still be fine.
James, we have a question for you about Solana. They want to know, do you think, since Ethereum had a 94% drawdown in its first cycle, if Solana is following the same bear market, do you think it's going to go down to $16 to $17?
No, I think we've seen the bottom. They put in there's that level of $31. In full disclosure, I added over 35% to my Solana bag when I hit that level, just based on fundamentals and based on relative valuation against Ethereum and other cryptos. So I do not see 17 happening unless we have a black swan event, and if, heaven forbid, the wheels come off. It's possible Solana could go back to 20, but not with the adoption and use case.
All right, Fair enough.
James, did you real quick? Did you catch my video? I was in the Solana store in New York.
I did,
and everybody was excited that they said you should tell James you were there. I'm like, trust me,
you bloody Solana shell, you.
I got to tell you, it was a pretty cool place, and like they walked you through this whole process, and it was pretty streamlined. I was just impressed about that they actually took the time to do that. So I think that's adoption through education. So that's more what we need.
And it's good for the whole crypto space. And I love the way when I saw how the time they take with the people to walk them through and explain stuff without pushing stuff. I thought it was an impressive approach. But that's what's very, very important to a chain is adoption. And I think certain chains are playing their cards right, driving adoption in clever ways.
Yeah. That was good. It's just that when I walked in, I was like, hey, this is a nice store. What is it all about? He's like, it's about, Solana. I said, yeah, I kind of dabble in this industry. He's like, yeah, I know who you are. But he said it just like that. And I was like, shoot, maybe he caught the video where I was bashing Solana or something. But I was like, yeah, whatever. Here we go.
Final question is, do you think you might miss the bottom if you're expecting alts to go as low as previous bear markets? I mean, it's a decent question, It's a question I've often struggled with this year, and I think I sort of came to terms with, for me, I'd rather miss the bottom than go back in at the same time as I did in 2018 and watch them drop another 70% or something. I don't know. I mean, I think crypto does this thing to you where like your first cycle, you're super optimistic. And then your second cycle, you're like, yes, maybe it kind of sucks though. And then your third cycle, you're just like, you just don't even. It's hard to even think about them, until they're down. What you've seen previously happen. So yeah, like it is certainly a risk that you could miss the bottom if you do become too deterministic. So yeah, that is certainly a risk that you have to figure out if it's worthwhile to take or not. I don't know if you guys had any thoughts. I mean, I think both of you have been are getting alts even now. So
yeah, one of the things that I think was really super fascinating, probably the most fascinating thing that I saw yesterday, was how clean and precisely Bitcoin bounced off 39% dominance. You know, it's like, you know, I think it's Rand says the bees float around to kind of what's hot. Once something is run, they move to another asset. And it was very clear that Bitcoin, on a relative perspective, was extremely oversold yesterday. And it was very nice to see that what I call the floor of 39% and the roof of 51% holding. So what did you think of that, Ben? You're probably saying, wow, 39%?
I mean, I'm happy to see it bounce. I mean, I would like to see it much higher before I would get too optimistic on altcoins. And I mean, by the way, I mean, even for you, if you think the floor is 39%, then wouldn't make that much sense to be super alt heavy, because if the bottom really is 39 and it's only going to go up from here, then it would make more sense to be Bitcoin heavy. But anyway,
unless of course this time is different.
Yeah, I mean, again, you can also look at dominance too without stable coins, and without stable coins, it's been putting in higher lows the entire year. It's just that when you include stable coins, it's down quite a bit. But yeah, without stable coins, it's actually just been putting in higher lows. All right, why don't we wrap it up there? Some interesting times ahead, I think, and we'll have some resolution to all of this stuff here in the next few months, at least. You know, where will the markets end up by the end of the year? What will the Fed do? Will they raise 75 basis points? Stay tuned until next time, right? But if you guys want to catch DCA live next week, well, whose channel will it be on, James or Rob?
Rob's.
Okay, so I think it'll be on Rob's channel next week. Make sure you go subscribe to both of their channels if you want to catch it every single week. We sort of just rotate it around, and whenever one of us can't make it, we always invite someone else on. But thank you guys for tuning in, and make sure you subscribe, give the video a thumbs up. We'll see you guys next time. Bye.
Awesome. Thanks, everybody.
Thank you.